Good morning, hello and welcome to Money Control's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. Well, it's a brand new day but the nervousness in the markets, it doesn't seem to go away. What, however, did come as a positive news yesterday was the FIIs that returned to buying Indian equities after 11 straight sessions. At the same time, DIIs also bought in tandem. In the past, we've always seen a tug of war between the two, between the FIs and the DIs, but that wasn't the case yesterday, so that gives some sigh of relief. But talking about how today stands, global picture is mixed. US markets ended higher overnight, but Asia Pacific markets have kicked off on a mixed note. But for our own markets, the picture is neither too promising because the GIFT Nifty is pointing to a muted start. Even the pre-opened rates are pointing to a subdued start for the Indian markets. But this wouldn't come as a big surprise because of the choppy sessions we've had past a couple of days too. But what we need to watch out is the Nifty sustenance above that 22,800 because that was the level that it provided support in yesterday's choppy session too. And if it breaks this level, would there be another bout of panic among investors? So we'll watch out for more in this, but for all this and more, we will be having our guests joining us as usual. So keep posting your stock related queries on our live feed and we will be taking them up shortly. Let's move on and take a quick look at the top headlines this hour. The S&P 500 hits a record high in a positive day on Wall Street, even as tariff and inflation concerns linger. The Nasdaq and Dow Jones closed with a slight gain. Asian markets trade mixed despite a bullish handover from Wall Street. The GIFT Nifty is indicating a lower start for the Indian markets. Gold prices rise on safe haven demand as uncertainty lingers on US President Donald Trump's tariff plans. Crude prices remain range bound with Brent trading around $75 per barrel. And more comments threaten a trade war. Trump's latest comments say that he plans to impose tariffs on auto imports in the neighborhood of 25%, and similar rates are likely to be issued on pharma and semiconductor imports. The US and Russia agree to explore economic and investment opportunities for both the countries that could rise in ending the war in Ukraine. The shift in approach comes after officials from both the countries met in Saudi Arabia. All right, yesterday we did see a very choppy session, but the markets did end lower. And the Sensex and Nifty, however, they did manage to recover very smartly, more than 0.5% from the intraday lows. And Nifty held on to that 22,800 mark, which was the crucial support that we were watching out for. FMCG, auto stocks, they were the top losers. On the other hand, IT provided some strength to the markets and, capped some of the downside that was visible in the markets. Broader indices, however, they continued to underperform the headline indices, and small caps particularly, they were hurt the most. Now let's take a look at how today's trade setup looks like. First up on your screen is the option queues data. Nifty put call ratio falling to 0.84 levels from 0.87 levels, continuing to reflect that pessimism in the markets. On the other hand, if you look at some of the F&O ban list, definitely Deepak Nitrate has come out of the F&O ban list as we were talking about. However, the stock that has been retained, that includes the like of Manappuram Finance. No new stocks, however, have been added on the list. On the other hand, as I mentioned, that FIIs have turned net buyers in the last session. They have bought stocks which was worth around 4,700 crore rupees in the cash markets. And on the similar tandem and in the similar sentiment, DIIs have also bought the stocks which is worth about 3,072 crore rupees in the cash markets. Now, just a couple of minutes before we go to the, before we hit the open, just 10 minutes to go, 5 minutes to go before that. But the pre-open rates are not pointing to a good picture. Let's see how the market sustained throughout the day too. On that note, let's quickly get on board with the technical expert of the show. We have with us Rajesh Palviya of Axis Securities. Rajesh, good morning. Let me begin with 22,800 as a support for Nifty. If it breaks, what can investors expect?
Good morning. So this is fourth attempt where Nifty able to defend this 22,800 on a closing basis, but still the pullback is still not that much encouraging. Nifty needs to cross 23,100, 23,150 level, then only some comfort buying will emerge in market, and then we may see further more pullback action in the market. Still, structure is weak. Mid cap, small cap are still struggling to cross or recover in this kind of supply pressure which we are experiencing since last couple of months from the FI side. So I think it's likely to remain in range 22,800 on the downside and 23,100 on the higher side. So this could be the possible range for Nifty for next couple of days. Either side breakout or breakdown will decide the major direction for the market. For Bank Nifty, the major supply zone is placed at around 49,300, 49,400 zone. Once Bank Nifty crosses those levels, then some short covering or some more recovery we may expect in for Bank Nifty. But till the time it's not crossing on the downside, the major critical support area is placed at 48,700. If it's a breach below 48,700, I think the trend which is still there for bearish side will continue, and then we may see further more lower level for Bank Nifty also. So for Bank Nifty range is 48,700 and on the higher side 49,400. So I think one should play in this range on the both side of trade. Structure is still weak, so sell on rise is the strategy until the Nifty and Bank Nifty not crosses the levels which we have mentioned on a closing basis.
Okay, Rajesh. Rajesh, yesterday IT stocks they held on to the markets in otherwise a weakish breadth. But what are the names are you gathering from the space? Because majority of this experts also that I spoke to, they are quite bullish on the IT names. Any top picks that you're eyeing out from this space?
So from IT space, I think some of the stocks which are holding the ground, that is, Wipro is showing a strength on long-term chart. The way stock is consolidating in a range, I think Wipro one can look at. Here we may see a rally to continue if it's continues to trade above 300 levels. So I think Wipro can extend its gain towards 325 to 330. So this stock can be looked at with stop loss of 300, but 325, 330 would be the target. And another stock, Tech Mahindra, is also looking bullish. That stock can be looked at for near-term trading perspective with stop loss of 1680. Upside target is 1750.
Okay, Wipro and Tech Mahindra. Tech Mahindra, of course, yesterday one of the top gainers on the Nifty after the CLSA's upgrade, and you have mentioned it as well. Rajesh, how about the FMCG space? Because 12 straight days of decline we have seen yesterday. How does the index looks poised for the near term?
It's a very mixed kind of behavior in FMCG. Every stock is having different kind of texture at this juncture. But from that pack, I think Berger Pant can be looked at. That stock is looking attractive. If we analyze the structure, almost since last 10-15 trading session, the stock is consolidating very tight range and holding above 50-day moving average. So I think here there is a chance that this stock can extend gain towards 520. So one can buy this stock with stop loss of 475.
Okay. In general, Rajesh, what should traders stick on to the strategy? Do you believe that sell on rise strategy is the go-to for the markets or for the time being, or what do you assess?
So it's easy to say sell on rise, but it's very difficult to execute when you are on trading desk because when your market is in oversold trajectory, you have already witnessed a 6 month of a 5 month of continuous downfall in the market. So it's very difficult. Those who are pro trader kind of involved in trading activity, they can do the trading, especially in index. So I think the index is continuously showing that it's in downtrend. So yes, one can go short in index till the major levels not breached on the higher side. So maybe they should follow 10-day, 20-day moving average until these levels are not taken out on the higher side for Bank Nifty and Nifty. I think whatever minor pullback they get, they can use shorting opportunity in the index at least to play this down move.
Okay, all right. Let's see how this pans out though. But the first rates coming on your screen for the Nifty, well, we have opened below that 22,900 mark. 0.5% cut coming in for the Nifty 50 at this point of time. Sensex is also down about 300 points. It has slipped further below 76,000 mark, and right now Sensex is about 75,639, and Nifty is also down by about 100 points at this point of time. India Wix continues to remain elevated, 2% uptick coming in for India Wix. Majority of the sectors have dipped into the negative territory. Nifty Auto Index, once again, more than 0.5% cut coming in for the Auto Index. Bank Nifty also in the red, 0.5% cut coming in. Nifty IT Index after yesterday's 1% rise, today it's seeing a profit booking again, 4/10% cut coming from the Nifty IT Index. Nifty Metals also not doing well. Broader markets also are underperforming the headline indices. Mid cap seeing a cut of about 1% at this point of time. Small caps also 0.8% cut coming in for the small cap indices too. Top gainers on the Nifty include the likes of Tata Consumer Products, seeing a slight and a very slim gain of about 0.3%. HCL Tech, 0.2% gain coming in for HCL Tech. NTPC, JSW Steel seeing very marginal gains at this point of time. On the other hand, if you look at some of the top losers on the Nifty 50, that includes the likes of some of the pharma names are taking a bit of a beaten down. They're taking a bit of a profit booking, and at this point of time, Dr. Reddy's Lab, 4% sharp cut. Cipla also with about 3.4% cut. Apollo Hospitals also with about 1% cut. Yesterday also Apollo Hospitals was one of the top Nifty losers, and today also it is extending its losing streak. ICICI Bank, Trent, Tech Mahindra are also some of the names which is dominating the Nifty 50 charts. But yes, Tata Motors, let's see how the stock is performing, because today morning we had a note coming out from the CLSA where they have upgraded the stock to a high conviction outperform, and they have set out a target price of about 930 rupees per share. Now, what CLSA believes is that the adverse near-term outlook gives some scope to enter at a good valuation, and since JLR is trading at 1.2x FY27 EV EBITDA, it is way below the multiple of 2.5x that it used to trade at. Rajesh, from 1000 rupees per share, we are now at 681. How does the stock look like on the charts? Tata Motors, any reversal on the horizon? What are you expecting?
On a very weak structure, and continuously we have seen series of lower top lower bottom formation in the stock, but since last couple of days stock is trying to hold its previous swing low of around 670 675 kind of zone. So for next couple of days, 670 is the crucial level to watch for. If it's able to hold, then some minor pullback we cannot be ruled out, because the stock is highly oversold across all time frame. So maybe some recovery would be there towards 700 to 720, but not much. Around 720, it will again, attract the supply pressure. So those who clearly looking for trading opportunity, 670 is the stop loss, and higher side 700 to 720 would be the target.
Okay, all right. 700 would be something that we need to watch out for. One of the top gainers at this point of time, Tata Motors, with more than 0.5% gain coming in. But let's move on to another stock in focus, that is your L&T. The company did announce that it has acquired about 26% stake in L&T Special Steels from Nuclear Power Corporation, and it is about for 170 crore rupees. Now, since L&T already holds about 70% shareholding in the company, following this, L&T Special Steels will become a wholly owned subsidiary of the infrastructure major. Rajesh, after December's breakout for L&T, the stock has been on a downward trend. How do you find valuations at this particular juncture for L&T?
Yeah, so after a brief consolidation, we may say, or we can say distribution of 7 8 month on a higher band, now stock has broken down its monthly support area, which was placed at around 3400 level. Now stock is slipped below to 20-day moving average also. So on the near term, short term structure, yes, there is a weakness. But again, on the long term, stock is still holding the ground. So I think those who are really looking for long term perspective, I think one should utilize this dip to buy and accumulate in a staggered manner. Maybe in correction, stock can correct further towards 3100 or 3050. So those who wants to buy in a staggered manner for long-term perspective, they can look for this stock, as overall long-term structure is still intact for the stock. And I think once market stabilized at a certain level, I think L&T could be an outperformer going forward. So I think in this market, the stock is giving you opportunity again to buy at lower prices.
Okay, all right. A good buy in this correction for L&T. But let's take another stock in focus, that is your Concor. The stock is reacting well, more than 0.5% gain coming in this weak market. The company was company awarded a 689 crore rupees contract to Braithwaite and Co. for manufacturing and supply of 30 BLSS spine car rakes on a turnkey basis. Rajesh, the stock has quite a negative setup for the past 6 months. Do you expect further underperformance for Concord? Because today the stock is doing fairly okayish, but how do you expect the near term to pan out?
Yeah, I think we may see further more underperformance as stock is continuously in downtrend. This is the, I think, eighth consecutive month where stock is in lower high-low formation. That clearly suggests that there is a sustained supply pressure in the stock. There is no sign of reversal even on the near-term, short-term chart. Stock is slipped below to all its long-term, short-term moving averages. So until the stock not crosses above 740, 750 zone, I think trend is likely to remain on the weaker side only, and whatever minor pullback if we get in the stock will attract to the supply pressure. So sell on rise would be the strategy for Concor. On the downside, the critical level to watch for is 665. If it breaks below 665, I think we may see another round of supply pressure towards 640, even 630 zone also.
Okay, all right, 6:30 zone also we could see. But let's take some viewer queries because they have been waiting in anticipation. We have the first query coming in from Anand Swaminath. He's asking the view on Kotak Bank for a very short-term trade. Kotak Bank, the stock is doing well today, and in the past 25 to 26 sessions, the stock has already gained about 13%, Rajesh. How does the stock look like on the charts? RBI has also lifted some curbs on its digital banking business.
So this is the only bank from whole banking universe which is almost trading near to its all-time high trajectory. Even from the large cap space, very few stocks which are trading near to their all-time high. One of the Kotak is one of that stock. I think the way the structure is shaped up on the monthly weekly chart, we believe that if it continues to hold above 1940 level on a closing basis, there is a potential to continue rally to first target would be 2050, 2150, and then 2200. So I think this target can be seen in the Kotak Bank. So I think Kotak can be outperformer once markets start recovering. So one should hold the position if you are already taken the position. 1940 should be your stop loss.
All right. Okay. Good position at this point of time. But let's move on to another stock query. That is your Shweta Naidu is asking on Ganesha Ecosphere. She's bought the stock at 1925 and she's asking whether or to wait or exit for a 6 months view. 1925, the stock is, down from what she's purchased at 1378 at this point of time, Rajesh. Uh, but the company did post a fairly good set of numbers on the Q3 fund. What do you expect? Can we expect certain reversal to what the level she has bought to?
So, if we analyze the near-term, short-term structure, stock is in downtrend only. The continuous series of low top, lower bottom formation in the stock. Stock has corrected significantly from the level of around 2,400 all the way. Now it's trading around 1,300. So already stock has broken all its long-term, short-term moving averages. And looking at the structure, we believe that till stock is not able to cross 1500 zone, I think trend is likely to remain on the weaker side. And maybe in this correction, stock can slide further towards 1180, 1155 zone. That's the level. Again, one should review it whether it's able to hold that critical support area in this correction or not. If it's hold, some pullback action would be there, but at this juncture, it's very difficult to say that whether one should buy or average around those level because we don't know when the market correction will stop. So I think it is correcting in line with the market only, but it's mid cap in nature, so correction is severe in terms of nature. So I think 1150, 1190 would be the next level on the downside till stock not crosses over 1500.
Okay. All right. Let's move on to another viewer query. Well, Satya is asking the view on Aditya Birla Fashion and whether or not it is a good stock to add for the next 1 year. Q3 numbers were fairly good. Q3, the net loss had narrowed and revenue also had risen. But how do you view the stock on the charts, Rajesh? Because the trend has been quite negative from the past 6 months.
Yeah, still the stock is moving in down sloping channel on daily as well as on the weekly chart. That clearly shows that stock is following the downward trajectory. Looking at the near term, short term structure, I think the stock is now trading near to its critical support area of 245 to 40 zone. If it breaks below 240, maybe we may see another cut towards 220 zone also. So 240 or 245 level needs to watch closely in next couple of days. If it's hold, some pullback towards 265 we may see. But again, on the high side, 265-70 zone would act as a major supply zone. Sell on rise would be the strategy at this juncture till stock not gives breakout about 270 zone.
All right, 270 zone that we are eyeing out for the stock. But let's move on to another viewer query. Satya is once again asking on power stocks and what to buy, whether or not Tata Power is good or Kalpataru projects. How does the stock look like on the charts, Rajesh? Because both of them have been quite underperformance from the past 6 months. If we see, Tata Power declined about 17%. Kalpataru also is about 25% downtick we are witnessing.
Yeah, to Tata Power is also in downtrend. The stock has broken all its near-term, short-term moving averages. Looking at the structure, 330, 328 is the immediate critical support area on the downside. If it breaks below 328, I think we may see further more downward move towards 3010 to 305. So that level can be achieved on the downside. Sell on rise is the strategy till the stock not crosses above 360 zone. So structure is weak. So I would suggest don't buy at this juncture until the stock not crosses above 360. Trend is likely to exhibit on the bearish side only.
Okay, all right. Trend is to be as the bearish side. So let's move on to another viewer query. That is your Kanan Manthan is asking their views on trend. Trend, how does the stock look like on the charts? Rajesh, Q3 numbers were promising, but I think investors have been eyeing out for the valuations to correct, and it has seen a significant correction, about 25% in the past 6 months. How do you find it, the stock at the current juncture?
So this stock was in limelight since last couple of a month, as we have seen, big correction in the stock, and we have already seen a very big rally also in the stock. The stock has moved to the level of 8,300 kind of zone, and from that we have witnessed almost 4 5 month correction towards 5,000 zone. So I think there is a still room for correction as the stock has broken its upsloping trend line on a monthly chart. So that clearly shows that on the long term chart there is a weakness at this juncture. So maybe on the downside, 4800, 70 would be the next downward target on the stock. Yes, when the trend reversal will happen, until the stock not crosses above 5800 level, trend is likely to exhibit on the bearish side only. So sell on rise would be the strategy. Uh, Change your stance once the stock crosses above 5800, but use any minor pullback action to short it. Maybe on the downside, 4570 would be the next target.
Okay, all right. Let's move to another viewer query, which is your Maninder Singh is asking the view on Bajaj Housing Finance because he's bought the stock at 137 levels and he's asking whether you should average out at this point of time. 108 at this point, Bajaj Housing Finance, Rajesh, and the stock is already below its way below its listing price, nearly 40% below its listing price. How do you expect the stock to perform in the near term?
So, if we go with the historical data, I think the high which stock has made, I think it was only on the IPO listing day, and since then, stock is in correction only. There is no recovery in the stock, and all the way stock corrected from 180 zone to now it's 108 zone. So, I think those who have bought post IPO or on post listing, they are in huge loss at this juncture, and those who have not exited the stock at the time of IPO listing, I think they are also in the loss now. So, looking at the overall structure, there is no sign of recovery at this juncture. The stock is continuously making lower top, lower bottom formation, uh, a huge negative structure on across all time frames. So, I think 140 would be the major level to cross. Then only we may see some hope towards the recovery. till it's not processed above 140, I think trend is likely to exhibit on the bearish side, or maybe if market trend remains like this, so maybe stock can go to the two digits also. So I think avoid at this juncture. Don't try to buy as structure is already weak.
Okay, all right. Structure is already weak at this point of time. So let's move on to another viewer query. That is, your Shweta Naidu is asking about Indian hotels. She's seeing an 8% loss, and whether she's asking should she average out or should she shift to other hotel player names like Lemon Tree or Chalet. How does the stock look like on the charts, Rajesh? Q3 numbers were promising. They also have a good expansion plan, but after this stock had a breakout, it's gone into a consolidation zone.
I think she should stick with Indian hotel only. Overall structure is bullish. Long-term structure is bullish. Yes, since last couple of months, some correction is happening in the stock in line with the market direction. But the stock is able to hold its 200-day moving average, and we have seen a reversal from those level. But still, I think she is already down by 8% from the purchase price. So I think once the market start recovering, I think this stock has potential to recover very faster, because if we look at the all other hotel stocks, I think this is the one of the outperforming stock, and still long-term structure, medium-term structure is still on the bullish side. So 700 is the stop loss to hold the position. I think if it's not break below 700, I think there is a possibility that stock can recover towards 770, even 800 zone also.
Okay, recover to 800 zone 2. Let's look at another stock in focus. Well, RVNL, the stock has been quite buzzing. The company did receive a letter of acceptance from Rail Infrastructure Development Company for the construction of about 9 stations under Corridor 4A of the Bengaluru Suburban Rail Project. Rajesh, RVNL, the stock did experience a breakout last month, but then again succumbed to selling pressure. How do you see the stock on the charts playing out for the near term?
So we have witnessed, most of the railway stocks have rallied ahead of budget, but I think post-budget, most of the stocks again, corrected significantly, as market was expecting much more on the railway infra spending, and I think that was not there. So the correction is still there. So ongoing correction is happening in the stock. So series of low top, lower bottom formation is still there on the longer term time frame. We believe that till the stock not crosses above 380 zone, trend is likely to remain on the weaker side only. But for trading perspective, if you want to buy for a very short period of time, so 330 should be your stop loss. We cannot rule out recovery in the stock. So 330, if you can follow the stop loss, so one recovery trade you can take towards 365 to 370.
Okay, all right. Let's move to another stock in focus, that is your Aurobindo Pharma. This stock is seeing a sharp cut of about 6% at this point of time. The company did announce the completion of US FDA pre-approval inspection at Eugia Steriles, which is a 100% step-down subsidiary located in Andhra Pradesh. Now, the inspection has concluded with about 5 observations, which the company plans to address within the prescribed time. But on the charts, Rajesh, how does the stock look like? Significant underperformance past 3 to 4 months.
Still underperformance is there, as a stock is now trading below to all its long-term moving averages. So I think looking at the structure, till the stock not crosses above 1150, 1200 zone, trend may remain on the weaker side. On the other hand, if it breaks below 1040, maybe we may see further more cut towards 990 zone also. So I think uh, 1150 needs to cross at least to extend further more recovery in the stock. At this juncture, structure is weak, series of lower top, lower bottom formation in the stock for daily as well as on the weekly chart. So I think I would avoid Aurobindo Pharma at this juncture.
Okay, okay. Avoid Aurobindo Pharma. But since it's just an uncertain environment at this time, Rajesh, any top bets that you have from the space? Anything on the market front?
Well, I think one should look at Hindalco. That stock is showing some sign of consolidation at the lower level, and breakout is already there on the weekly chart of falling trend line. So looking at the structure of Hindalco, we believe that this stock can extend its gain. Possible up move towards 645 to 650 we may see in the near term perspective. So Hindalco can be looked at to buy with stop loss of 602. Another stock that I have already mentioned, that is Berger Pet. Here also we are bullish, so that stock can be looked at. Another stock that we are on the bullish side, buying side, that is SBI Card. That stock is also holding the ground at higher level. Very strong rally in this month, and stock is consolidating a higher level. So I think here, if its stocks manage to cross above 875, then this rally can extend to 920, 930 zone also. So SBI Card can be looked at to buy with stop loss of 840, and Kotak Bank, another choice on the banking side that can be also looked at for on the buying side. Upside target I have already mentioned in my earlier remark, 2040, 2050 would be the next target. Stop loss should be around 1940.
All right. All right. With that, we have to let you go, Rajesh. But thank you so much for your time and hope we connect with you soon.
Thank you.
All right, if we take a quick check of the markets, we have recovered and rebounded off from its day's low. However, Sensex continues to be still down about 100 points at this point of time. Nifty is also below that 22,900 mark. Of course, majority of the losses which have been trimmed is because of the banking index. The banking index up about 0.1% at this point of time. Nifty midcaps is also showing quite a bit of resilience, 700 points recovery. Midcaps at about 0.3% gain coming in for the midcap index. Small caps also doing quite well, 1.4% uptick for small cap index at this point of time. So there is some kind of recovery which is taking place in the markets, but we'll see if it is sustainable or not. But on that note, let's quickly get on board with the fundamental guest of the show. We have Narendra Solanki, head of fundamental research at Anand Rathi. Narendra, good morning. So good to have you.
Yeah, good morning.
Narendra, what do you make sense of the market texture right now? We've seen fair amount of correction from the headline indices. There's a lot of volatility also. But how are you finding the valuations at this point of time?
Yeah, definitely. So right now, since markets we have seen have already fallen in double digits. If you see for the Nifty, it is in only double digits. But if you see mid cap and small cap, they are almost hovering around 19-20% kind of a drawdown, and individual stocks have fallen more than that. It's between 30 to 50% kind of drawdown for each stock. So right now, what our view is that market should stabilize from here on. And if you talk about valuation of the Nifty, so Nifty for FY26, it is trading something anywhere around 18.5, 19 times. And if you factor in FY27 numbers, then it is somewhere between 17 times kind of price to earning multiples. So definitely large caps have come to a decent attractive valuation, and even in mid and small caps, there are pockets of opportunity which have started emerging. And in mid and small caps, rather than going in for a theme or a category, I think it could be better to go in on a stock specific basis. And there are a lot of opportunity which have started post recent correction. Now coming to the short term view, I think FII selling is one of the key factors, and add to that the global volatility introduced by the new US administration regarding reciprocal tariffs. So things are way too uncertain and complex if you talk about tariffs, because a lot of nitty-gritties are there, and there are a lot of supply chain issues as well, and we could see supply chains shifting post this tariff situation, and that is adding to the volatility globally. So things would remain like this until unless we see some more clarity and stable tariff policies by the new Trump administration. However, we see that from Q1 of next financial year, which is April to June quarter, things should start stabilizing, and we should see some improvements coming from that quarter onwards, both in terms of earnings as well as market sentiments. So it's a good
Okay.
time overall to start picking stocks and start adding to your portfolio from here onwards.
Okay, okay. Narendra, you mentioned that the large caps are a good bet because they have come off well from its sky high valuations that we were seeing for. But with FIIs remaining on the sidelines, do you still believe that we can go for large caps? And like you were talking about reciprocal tariffs that the Trump is planning on, and even the tariff that he announced yesterday over auto and of course pharma imports too, that he'll be planning from April onwards. How do you see the entire picture panning out for the large cap play in India?
See, as far as tariffs are concerned, I think rather than looking on a headline number, I think we have to see how and what kind of products, whether they are talking about tariff, whether it in pharma, whether it's APIs, whether it's finished dosage formulation. There are different complex issues. As far as autos are concerned, autos, there are a lot of supply chain issues. So it's not always a matter that you are importing from a particular country for a particular product. It's always for each and every product, there are a lot of different areas where you import different kind of parts, and sometimes you import, assemble, and re-export as well. So it would not be that easy for US companies to manage those supply chain issues, and definitely there would be some issues regarding supply chain. So we have to see how the details pan out regarding that. Now coming to the large cap, I think we are more focused on the stocks or the sectors which are more domestic oriented and which have less exposure to global volatility. So you can definitely look at the space of FMCG, consumer durables, even infrastructure kind of stocks like Ultratech Cement. Then in auto, TVS Motors are one of top picks. In banks, ICICI Banks, you can go for that. Then ITC is there in consumer FMCG. So you can go for these kind of stocks and sectors in large cap.
Okay, okay. How about the mid and small cap space? Because there are plenty of earnings disappointments coming in that front, and the mid cap and small cap still are still trading at a premium valuations compared to what the large caps are doing. How do you see the play going out from there? Do you expect them to be as how much fall do you expect them to happen in the near term?
Yeah, definitely. If you see historical data, mid cap and small caps have always traded at some premium. Although right now I think the premium is hovering somewhere between 30 to 40%, depending upon what different set of stocks you take, which has fallen from the premium of around 60 to 70%. So with this one, I think our overall view is that even in mid and small caps, you can go with the stocks which are more domestic focused stocks and which are having a good capex pipeline and the order books. Plus, the results have been pretty much unaffected in this quarter. So those kind of stocks would be better choice to go in. And even in healthcare segment, if you see hospitals have been adding a lot of capacities, and a lot of capacities have also already been added in this segment. So you can go for global health, then KIMS Hospital is there. So these kind of stocks are there in mid and small caps. Then Astral is there. Sports, we like sports because it's if you see the tractor sales data, so it has been performing very well. Then in durables, Voltas is one of the top picks. Then Lloyd's Metal in metal space. Then Jyoti CNC is one of the stocks which is looking very attractive post of all. And defense data patterns kind of stocks you can add. So there are a few stocks which have already started looking attractive in mid and small cap.
Okay, 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 Narendra. Narendra, let's talk about FIs in particular because yesterday they did come back to India. But how are you seeing the China's tech development playing out? Because on one hand we have the tariff plays for China, on the other hand DeepSeek is creating quite a rumble. So does it mean that FI is going to be a little dicey towards India in the for the medium term at least?
The fallout impact of due to China we have already seen and we've been seeing, and no doubt, although the China is biggest exporter to the US, but there would be some impact on India as well. And I think that repositioning has we have already seen since I think August September onwards, and this is the fourth month, consecutive fourth month where we have seen negative returns for the Nifty. So I think the repositioning, most of the repositioning has already been done by the FIs, and I think from April onwards, we should see some reassessment by the FIAs, and we could see India again inching back and then coming to the favorite list of the FIAs, and then we should start seeing some kind of flows returning back.
Okay, okay. Narendra, you did mention that, about healthcare space and of course the cement space that you were talking about. But what about the consumption theme? Because the sector was expected to do well after the budget has announced certain tax relief measures too. How are you eyeing the consumption theme for the for the longer term horizon?
Yeah, definitely consumption looks very good for medium to long term. And if you see, rural growth has been sustaining its positive trajectory, and urban, which was a point of concern last quarter as well. So it has also shown some kind of arrest in the decline. And from April, from next quarter onwards, we should start to see urban consumption also showing some green shoots. And now coming to the tax breaks, so these tax breaks would be applicable from April onwards. So the actual impact, whatever we would be going to see, would be from April onwards. So definitely, even if you see inflation data, inflation has already come down, especially in foods and vegetables segment. So gradually, we would see the impact of inflation also fading away for the sector, and the impact on raw material cost also gradually going away. So from next quarter onwards, we would start to see the impact in numbers as well, wherein we could see some pickup in urban consumption as well as the margins also stabilizing because of fall in the commodity prices.
Okay, okay. So, Narendra, in just one line, if we have to say right now, do you believe that this is the right time to add on to certain good names? The shopping bags should be put on at this point of time then?
Yes, yes, definitely. Even if you see large caps, they have on an average fallen by about between 12 to 15%. So it's a good time. And in mid caps, the stocks on an average have fallen between 30 to 40%. So there are a lot of stock-specific individual opportunities coming up in the market. At most, what you can assume is that even if we see a further 2 to 3% kind of drawdown in Nifty, which may translate into 5 to 8% kind of a drawdown in mid and small cap. So I think that's also a good enough scenario in order to start investing in a staggered manner. And at max, I think we see 5 to 8% kind of drawdown from here on. So it's a very good risk reward situation for the long term investors right now.
Okay, a good time as a from a risk reward point of view. But with that, we have to let you go, Narendra. Thank you so much for your time, and we hope that we connect with you soon.
Yeah, thank you.
Thank you. All right. Let's take a quick check of the markets. Well, definitely we are seeing a good sign of reversal. Sensex is now up in the green at this point of time. 75,950 mark it is above at, and Nifty also has given, it is still in the red at this point of time, but then a good recovery. We'll probably see green in the next few minutes at this point of time, but right now it is above that 22,900 mark for the Nifty 50 index. And of course, what has done well for the markets is definitely the Bank Nifty index, 7/10, more than 0.5% gain coming in from the banking and the financials pack. Media, metals, all of them doing well. Nifty PSU banks holding up well. Realty index doing well. HDFC Bank giving about 0.5%, 0.5% gain coming in from the HDFC Bank. ICICI Bank also doing well, SBI Bank, SBI also with about 1% at this point of time. So private lenders are also holding up well in this market at this point of time. Small caps broader, so the entire recovery is taking on a broad based. So we can see that the mid caps are also exhibiting resilience along with the small caps. Small caps, which faced a brunt of the selling pressure yesterday, has come back and given and registered about 1.4% gain at this point of time. Mid caps also more than 0.5% uptick coming in for the mid cap space. But with that, we have come to an end of this edition of the Opening Bell. Don't forget to tune in at 3:30 p.m. for Closing Bell. We will be discussing how the market texture has developed, what the stocks were in focus. Until then, signing off.